the president has tweeted about it.
Are you going to vote for the tariff resolution?
I am going to vote for Canada to make sure that we have good relations with Canada here.
Tariffs are a terrible mistake. They don't work. They will lead to higher prices. They are a tax, and they have historically been bad for our economy.
Mr. President, the price hikes that will happen for Maine families, every time they go to the grocery store, they fill their gas tank, they fill their heating oil tank. If these tariffs go into effect, will be so harmful. And as price hikes always do, they will hurt those the most who can afford them the least.
3 of the 4 Senate Republicans, Susan Collins, Rand Paul, and Lisa Murkowski, who joined all Senate Democrats to pass a resolution yesterday to eliminate President Trump's tariffs on Canadian imports. The bill now moves to the Republican-controlled House, where it's more than likely to die. Ahead of yesterday's vote, Trump called out the Republicans who were set to support the measure, writing on social media, quote, "What is wrong with them?" Other than suffering from Trump derangement syndrome, they have been extremely difficult to deal with and unbelievably disloyal to hardworking Majority Leader John Thune and the Republican Party itself. The other Republican to vote for the measure, Senator Mitch McConnell, defended his position in a statement, writing in part, quote, "At a time when Americans are tightening their belts, we would do well to avoid policies that heap on the pain. We ought to strengthen our friendships abroad and reinforce our allies as pillars of American prosperity and security." And Steve Ratner, you say most economists believe the tariffs are counterproductive and that there is hard evidence to back that view. Can you walk us through the numbers? And is there any positive take on this?
Well, I can answer the second question first. I don't think there's a single positive take on this. This is all just bad. It's bad, as we talked about before, for inflation. It's bad for economic growth. It's bad for everything. But let me put this a little bit in perspective. We talked about the stock market today and how bad a day it's going to have. This chart predates that, and it goes back really to the election. And I want to just show you, because Trump's got a bunch, as we also talked briefly about before, of other economic and challenges he's facing. And so the stock market, which is this red line, our stock market, we start out here. And he was doing pretty well after the election. There was this burst of Trump euphoria, as we saw in 2016 as well. But since Inauguration Day, it has basically been straight down for our stock market. And that is a combination of anticipation of these tariffs, but also just all the chaos and commotion down there, the cutting, the Doge, all this stuff, and the uncertainty has really scared the market. And that's actually in stark contrast. China, which has had a terrible run in its stock market, has actually done exceptionally well. And even Europe, which is certainly nothing to brag about on the economic front, has way outperformed us. So Trump had a set of challenges already, as represented by the stock market before. And again, before yesterday, because we don't have updated numbers just yet, economists were taking down their projections for the economy for this year. So Goldman Sachs thinks that unemployment, which they thought was going to be 4%, they now think is going to be 4.5%. And these numbers are going to get worse when they put out a new forecast. Inflation, which they thought was going to be between 2 and 2.5%, they now think is going to be almost 3.5%. And economic growth, which was supposed to be almost 2.5%, they've taken down to 1%. And let me just inject, the last quarter of the Biden administration, economic growth was 2.8%, and inflation was down in the 3% range. And so they have taken an economy that was actually in pretty decent shape and moving in the right direction, and they are going to turn it upside down. And I think 50-50 into a recession.
Wow, 50-50. And you have, as you said, companies like Goldman Sachs using the word stagflation, that combination of inflation and slowing growth. So let's move to your second chart, Steve, which is really the heart of this matter. Rising prices for regular people just trying to buy things around the house. What are you seeing there?
Yeah, so this is an analysis done by Yale's Budget Lab. It was, again, done before yesterday. It assumed a 20% universal tariff. I think you're going to find these numbers get a bit worse when they rerun them for the actual proposal, but it'll give you a very good sense of what we're looking at. And so it divides the country into 10 groups based on income. If you take the middle group here, they're looking at an average of $3,800 a year in additional costs to them. As you go up the income scale, the actual dollars you get do go up, but what's happening is the percent loss of your income is going down. In other words, it's regressive. People at the upper end are losing less of their income. People at the bottom end are losing more of their income, over 5% of the income, $2,300, somewhere in the second tenth from the bottom, which is probably $20,000 a year or something like that of annual income. Obviously, not a lot. So this is an indication of consumers. We're also starting to see an impact on business, and that's, again, part of why share prices are so depressed, because of the costs. This is prices paid by manufacturers for their goods that they need to make their product, and you can see how it's already shot up before the tariffs. In anticipation of the tariffs, companies are adding to their prices, and we've also had a few tariffs put in place. And I'll just also quickly note that manufacturing has turned down and is now in contraction, another piece of not good news for the Trump administration.
So as we move to your third chart, you raised President McKinley a few minutes ago, Steve. So let's talk about the history of tariffs. We have a long record to prove whether they work or they don't work. What does it show you?
Yeah, and we don't have to go back to McKinley. We only have to really go back to Trump 1.0, because he put in a bunch of tariffs. He put in steel tariffs. And by the way, putting in steel and aluminum tariffs, which he's also done this time, is really actually particularly dumb, because you're raising the prices for companies in this country that use steel and aluminum to make their products, like car companies. In fact, I think the CEO of Ford used the word dumb when he put in his last round of steel and aluminum tariffs. But let's go back to the ones that he put in last time around. So we gained a grand total of 1,000 steel jobs. But for the reason I said, all the increased cost to all the steel users, we actually lost 75,000 jobs out in the manufacturing industry because their steel prices had gone up. So net loss of 74,000 jobs from that set of tariffs.
And Steve, sorry to interrupt. This is the whole crux of the argument for the president, which is we're putting these tariffs on because it's going to help the American economy. It's going to drive business to the United States and create jobs. But what you're saying is just the opposite happened a few years ago.
Yeah, and as I said, because when they put them on raw materials like steel and aluminum, it's particularly stupid, because that's what our companies use to make their products. And so their costs go up, their sales go down, and they cut their workforce. Let's look at his farm tariffs. So he put on $50 billion of total tariffs in Trump 1.0 in his trade war then. But it hurt our farmers, because our biggest export is farm products like soybeans. And so he ended up subsidizing our farmers for $24 billion. So he took his $50 billion and spent half of it giving it back to farmers. So they've talked about how these tariffs are going to solve the budget deficit problem and generate hundreds of billions of dollars of revenues. History would not tell you that that is what is likely to happen. And then let's look at one other specific example from the past: laundry machines. They put a tariff on laundry machines. It raised the price of laundry machines by $200. And by the way, companies also increased the price of dryers because they sell them together. And they created 1,800 jobs at a cost per job of $817,000 per job created, because there was some additional domestic production. But when the tariffs ended during the Biden administration, the price of the machines went down $75. And when all is said and done, they actually went down by a bit less, by a bit more than inflation. So here's an example of exactly how it works. You put on tariffs, prices go up for everything: domestic, imported, washing machines and dryers. You take them off, they go down. And for all that, you've paid $800,000 a job.
How quickly are American consumers going to feel this?
I think probably very quickly, and then in the next few months. The tariffs go into effect over the next few days, almost instantaneously. There are some goods that are already here that won't be tariffed. But I think, frankly, you're going to see companies start to raise prices right away, because it's going to be, as we talked earlier, it's going to be hard for them to recoup all the costs of the tariff. and they're going to do their best to do it by raising prices very quickly.
Morning, Joe. Economic analyst Steve Ratner, thank you very much
Thanks,
for
Steve.
all those explanations.